Laura Hodges, MEPS US steel market analyst. Great to have you back on Marketing Minutes for another insight into the United States steel market. How are you doing?
Great. End of summer over here, but looking forward to a nice fall. So it's a good time.
Yeah, it's not very often we say it in the UK, but I'm ready for a bit of cooler weather. So let's see how that goes. So we're here to draw on some of the recent research conducted for the International Steel Review at MEPS, which obviously provides commentaries and forecast and, of course, current market prices. And this month's research covered a period really where we've seen, of course, a lot of US trade discussions, quite a few agreements, but clearly a clarification that seemingly the 50% import tariff on steel is here to stay. So how's this situation affecting supply in particular into the US?
Great question. I think there we're going to start with imports, which has also been the most surprising impact given the 50% tariff levels. Because looking at the data with preliminary data through July right now for U.S. imports, we've really seen a continued steady flow of imports. Right now, we have about 2 million tons of imports coming into the United States each month, which does represent a pretty steady flow of supply. So, despite this kind of steady picture that I just painted, there are some shifts coming by that we should talk about by product and even who's importing into the United States as a result of the tariffs. Looking at it by country, we have seen Canada and Mexico imports down, but we've other countries have really stepped in to help out with the flow of imports, and namely that's Malaysia, Indonesia, India. Now, on the product side, flat and long imports are down, with flat being a bit weaker than even longs. But stainless semi-finished products such as slab and pipe and tube are all up. And there's two other products on the flat and long side I do want to mention that have sort of bucked the trend and actually seen stronger increases, and that is wire rod and tin plate. Those two products have traditionally had a bit less domestic production, have relied on imports, and so that has continued to flow through. Now, if we shift our focus over to domestic production, we've seen that really trending higher since May. The latest World Steel data points to a almost 5% year-on-year increase in U.S. steel production. And utilization rates are trending closer to 80%. So outside of a few products, I'd say that I'd paint the picture of overall supply is in good shape, despite the 50% tariffs and given current levels of demand.
Well, you just mentioned demand there, teeing up my segue, I suppose, into my next question. How is demand faring in the US market, and how's that currently affecting prices?
Demand's not great. I'd say auto has been fairly steady, especially with in more recent months after the passing of the U.S. tariff on auto and auto parts. But the other key end market for steel construction is down. And you just get the sense, speaking with MEPS research partners, that demand's just okay. And certainly not anywhere near where they thought it would be at the beginning of the year. The two areas that our research partners do point to as bright spots are data centers, infrastructure spend. And data centers have certainly seen an extraordinary increase over the last years. But it still represents less than 1% to 2% or around 1% to 2% of total construction spending. So it's just hard to imagine that even this bright spot of data centers that a lot of people want to talk about is going to be enough to carry the industry right now and even into the future. There are two things that really need to happen for stronger demand, and of course, even stronger prices: lower interest rates and the end of uncertainty around our U.S. Trade policy. Both of these things are, of course, eventually going to happen, but we're not expecting the effects of both of these areas to really impact steel demand and, of course, prices until we get into 2026.
Okay, well, you're already straying into the territory of your next answer, hopefully, because finally, it'd be great to hear a little bit about MEPS outlook for the US steel prices and some of the areas that you've recently touched upon. What are our expectations of the market's trends in the coming months?
Sure. Well, I haven't mentioned what happened even this month in our reporting of steel prices for August. So let's start there. MEPS did assess all flat product prices down this month. This includes hot rolled, cold rolled, coil, plate. All of them were pushed lower this last month, or this month in August. Long products painted a little bit of a more mixed picture with this, a slightly tighter supply situation there. Wire rod and rebar were up, with beams and merchant bar flat. So going forward, with this backdrop that we've been talking about of good supply and just okay demand, we're going to see prices in the year lower than where they are right now. So put this in perspective, just giving an example of one, price, which is, our benchmark price, hot rolled coil. We assessed prices around 800 to 850 in the latest month. We have them finishing the year under that level, closer to 750, 775 per short ton by the end of this year. So it's hard to mention, though, an outlook in this environment without discussing risks, I have to say. No good forecaster would probably paint a picture, especially in this environment, without highlighting a few risks that could change our outlook. The first one to mention is more near term. We are coming upon our fall outage season. And with all of the steel capacity expected to come, that's coming online right now, we do have a fair amount of new capacity being added to our domestic supply picture. We're not expecting an above average outage season. But there could be changes to that, especially where prices are sitting. So which would change our outlook on the higher side. The second one to mention is interest rates. The market has priced in a 25 basis point cut at the next Fed meeting in mid-September. And then after that, the Fed meets 2 more times in 2025. We are expecting another 25 basis point by the end of the year cut, which brings interest rates just below 4% by the end of the year. Now, depending on which way, inflation, economic reports kind of come out between now and the end of the year, that could change. And of course, it could change our outlook for prices. But I don't think, given the lagged impact of interest rates to prices, that we'll see that either way it moves materially impact our outlook until 2026. And last but not least, I have not mentioned the word tariff all that much throughout our discussion here, which is, a little surprising given all this. But I do need to mention that there is still tariff uncertainty despite the July 31st announcement of reciprocal tariffs with all of our trading partners here in the United States. So a few kind of things to watch in the upcoming months is, of course, the ongoing negotiation of trade deals. Two major trading partners, Canada and Mexico, their negotiation deadlines were extended to roughly, the beginning of November. And then there's still a lot of trade deal details that need to be hammered out with a fair amount of key trading partners. 232 investigations are still pending with 8 different sectors, including semiconductors, pharmaceuticals, lumber and their derived products. There's 8 Section 232 investigations still out there, which could lift tariffs in the future. And finally, and probably even most important to the sector that we're talking about here, steel, is there is this potential of a steel quota system being put in place with the EU and the UK, which has been, mentioned in their announcements of their preliminary trade deals. So, needless to say, there is a risk of this tariff uncertainty that has been sort of constraining or tempering steel demand and prices over the last 6 months, extending further than we hope into 2026.
Okay, what a summary, and like you say, a lot of risks in that outlook as well, Laura. So a lot of things to keep tabs on. I guess we're speaking to steel market participants in the US on a daily basis at MEPS.
Yes.
I guess people should keep an eye
on
the MEPS website. Subscribe to our products to try and keep up to date with those developments as well. Lots to watch, like you say.
Lots to watch, and we will certainly be keeping our clients up to date on any of these developments, and more importantly, the impact to U.S. steel markets and prices.
Great stuff. Lovely. Thanks ever so much for your time. I hope to have you back on the podcast soon. It's been great.
I look forward to it.
Thanks, Laura.